Exchange India Limited's Q1FY20 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you. Good afternoon, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Ion Exchange India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings conference call for the first quarter of financial year 2022. Before we begin, I'd like to mention a short cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance in these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings conference call and give it over to them for opening remarks. We have with us Mr. Ankur Patni, Executive Director, Mr. N.M. Randeve, Executive Vice President of Finance, Mr. Vasant Naik, Senior Vice President of Finance, and Mr. Milind Puranik, Company Secretary. I now request Mr. Vasant Naik to give his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good afternoon, everybody. It is a pleasure to welcome you to the earnings conference call for the first quarter of financial year of 2022. Firstly, I hope that everyone is keeping safe and well. Let me take you through the financial performance for the Q1 of FY21-22 of our company on a consolidated basis. The operating income for the quarter was INR 3141 million, an increase of approximately 18% year-on-year. Operating EBITDA reported was INR 358 million, an increase of approximately 14% year-on-year, and the EBITDA margin percentage stood at 11.4%, a slight decrease of 40 basis points on year-on-year. Net profit after tax was INR 232 million, an increase of 32.6% year-on-year, while the PAT margin percentage was 7.39%, an improvement of 79 basis points on a year-on-year basis. As evident from the numbers, the company witnessed steady sequential improvement in the financial performance. There has been an improved opportunity flow from the international markets. However, on account of the resurgence of the second wave of COVID-19, besides dampening the economic recovery, it has also posed challenges for execution, including disruptions in logistics for material movement. Let me take you through the quarterly segmental performance on a consolidated basis. In the engineering division, the revenue for the quarter was INR 1767 million, an improvement of 3.8% compared to the same period of last year. The EBIT for this segment was INR 92 million, which decreased by 17% on a year-on-year basis. The execution of the ongoing engineering orders was affected due to the second wave of COVID-19 and restrictions in various geographies. We have a healthy order book on the back of steady flow of medium-sized orders, coupled with two large EPC orders received from UP Jal Nigam for approximately 12,000 million and IOCL Paradip Refinery for an EPC project for design and installation of an effluent treatment plant for a total contract value of INR 3574 million. The ground activity in the UP Jal Nigam project has started, and we expect to start accruing the revenues from the third quarter of this current financial year. The total order book as of 30th June 2021 stood at INR 7,320 million. This excludes the Sri Lanka project, the UP Jal Nigam project, and the recent contract awarded to us from IOCL. If we add these to the order book, our total order book would be more than INR 25,000 million, and we would also have a bid pipeline of approximately INR 55,000 million. With this, we have a strong revenue visibility for the next 2-3 years from the engineering segment. Coming to the chemical division, the revenue for the quarter was INR 1251 million, which increased by 51% on a year-on-year basis. The EBIT was 273 million, which also increased by 53% on a year-on-year basis. With the progressive COVID-19 relaxations in the country, the sales and dispatches have picked up by the quarter end. However, exports for the quarter were muted due to the logistic challenges which affected the dispatches. The margins were also under pressure due to the increase in the raw material input costs. The company has taken measures to mitigate the impact, including passing on the cost to the customers wherever possible. Lastly, in the consumer product division, the revenue for the quarter was INR 235 million, an increase of about 17% on a year-on-year basis. The loss for the quarter was INR 13 million versus a loss of 8.4 million for the same period in the previous financial year. The COVID second wave and the associated social restrictions with restrained economic activity in key consumer sectors continued to pose challenges. Although the company has launched some new products at the end of the quarter, which are getting good responses in the market. With this, we can now open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Sunil Kothari from Unique Portfolio Management Service. Please go ahead.
Thanks for opportunity, sir. Congratulations for really very good performance during this time. Sir, my question is basically chemical segment during last almost 10-12 quarters. Our range of revenue is roughly 110, 20, 25 crore. So I wanted to understand the constraint is on the side of demand or capacity. That is my first question. And whatever the constraint, our efforts we are taking to overcome those hurdles to move towards a new trajectory.
Thank you, Sunilji.
Thank you.
The chemical segment is seeing much better prospects. The demand scenario has improved, especially in the export market. However, during this first quarter, we faced significant logistic challenges, availability of containers and other challenges associated with shipping the products to international locations were quite heightened. One of the reasons why the numbers have not grown more than what they already have.
So, sir, my question is, are we adding enough capacity and doing capex? I think last quarter call also you said that we are planning to invest more than 100 crore. Previously we planned, and then we are thinking about bigger investments. So if you can talk a little bit more about opportunity and the investment we are doing. I'm not worried about this quarterly numbers. What I'm saying is, are we moving towards bigger size of chemical business by investing and opening up further opportunity?
Yes, we are. As of this quarter, our capacity utilization was roughly in the range of 70%. So that leaves us a little bit of headway. Beyond that, as I've been mentioning over the past few calls, we are going to invest in the Greenfield project to expand capacity on resins. This investment is going to be upwards of 200 crores. And that would increase our ability on this part of the market substantially. We are also expanding our capacities in the other chemical line. This is not just happening in India, but we are also putting up facilities abroad to meet the distributed demand which we are seeing.
Mm-hmm. So, sir, by when we are planning to invest this 200 crore plus investment, when the project execution cycle, something more detail will be very helpful.
The investments would likely start towards the end of this financial year. The capacity would get online only towards the end of FY23.
Hmm. Okay, sir. And so my next question is on engineering side. You rightly always talks very positively about our capability in the international market and our recognition in engineering segment. And we were, I think, expecting some really good and sizable orders, which we already received from domestic government of Indian UP government's project. Anything, sir, would you like to talk on international order? That is the one question. And related to that, currently we are executing roughly 1,000 crore of a size of business in engineering segment. If a given order and international opportunity, can we reach a higher size of execution, maybe 1,500 crore, maybe 2,000 crore? And for doing that, what we will require to do? And are we preparing ourselves for those things? If you can share your thoughts, it will be really helpful.
We have been following a lot of opportunities globally.
Mm-hmm.
As I have shared on a few of the earlier calls, these opportunities take time to mature. However, we are close to concluding some of these. I would still not be able to give you an exact timeline, but hopefully it will be soon. These are large international orders. In terms of looking at an overall expanded invoicing from the engineering segment, I certainly hope that in the coming period, we will be able to execute at a larger scale. We are in a position to execute a few large orders, and as we speak, we are augmenting our capabilities to be able to handle more numbers of such large contracts.
Thank you very much. Mr. Kodari, I'll request you to come back in the question queue for a follow-up question. I request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Ranjit Shivaram from ICICI Securities. Please go ahead.
Yeah, hi sir. How are you? Hope we are able to tackle this COVID in a better way compared to our competition, looking at the numbers. So again, just wanted to know this 200 crore of capex which we are putting. So what can be the potential revenue from this 200 crore capex? If you can share some ballpark numbers on this. Hello?
We should be expanding our capacity substantially. This would go up by more than double of our current capacity eventually. In the initial phases, we are expecting the capacity to at least double, and thereafter we will take up further expansion of that capacity.
Okay, so potentially the contribution from this resin segment can potentially double from here on once these capacities come on stream. Is that understanding correct?
That's right. Once we achieve full capacity utilization, that is what would happen.
Okay. And sir, you had mentioned 5,500 crore in the order pipeline. So if you can elaborate, from which segments are you seeing these orders, or what will be the timelines, or some more clarity on that order pipeline of 5,500 crore which you have shared in your PPT?
The offer pipeline which we have, that is largely in the heavy segment. So it would be a mix of infrastructure, industries like refineries, steel, fertilizer, the power segment. So it is slightly biased towards the heavy segment, and a reasonably good percentage of international offers. This does not include the mega projects that we are pursuing in the international markets.
Okay, and we get to hear regarding this desalination project from Chennai, and also there have been a couple of other desalination in and around Bombay. Did we participate in any of these tenders, or we will try to stay away from desalination? What is our strategy on this desalination market?
We were one of the first in the country to enter into the desalination engineering projects, and have been participating in such projects for quite some time. However, we are not necessarily pursuing all activities, and especially when it comes to the infrastructure side or the municipal side, we take our pick and would pursue only selected opportunities.
So we won't be looking at Chennai because of the size of the project. Is that understanding correct?
We would evaluate our strategies and would be taking a decision on this in the times to come.
Okay, great. All the best. I will join the queue for more questions, and all the very best.
Thank you.
Thank you. The next question is from the line of Deepen Shah, an individual investor. Please go ahead.
Yeah, thank you for the opportunity and congratulations on a good set of numbers. Sir, continuing with the chemical business, I just wanted a slightly more understanding on how is the competitive scenario in the chemical segment panning out, and specifically, are there any protection or protective measures which help us in terms of, say, anti-dumping duty or any other protection which is currently helping us? And if yes, then whether you expect these to remain or to go away? Thank you.
There are no significant advantages which we are getting because of anti-dumping duties or otherwise.
Mm-hmm.
We are experiencing some unreasonable price movements on the raw material side, and the corresponding price movements which should happen on the finished goods may not always be apparent. Mm-hmm. Therefore, in spite of these unreasonable movements, we have not really seen any countermeasures being taken from the side of the government. But we are well capable of handling competition both domestically and internationally.
Okay. And sir, in terms of the margins in this business, how confident are we of being able to pass on all the cost increases, or maybe we should expect some impact on the margins in the foreseeable future?
We have seen a good amount of impact in the current period, and that is the margins in the chemical segment have dipped a little bit. Mm-hmm. Our ability to pass on the costs is reasonable, but it takes a little bit time. It is not immediate. Roughly, it takes 1.5 to 2 months for the margins to get stabilized again.
Okay.
We should be able to do that even in case of future moves. Certainly, we have been for the recent commodity price increases.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Chirag from SR Basaria and Associates. Please go ahead.
Good morning, board. This is Chirag. So, sir, according to you, do you see ion exchange within 10 years? And what are you planning to grow its operations in a diversified field?
I'm sorry, Chirag, your voice was not very clear. Can you please repeat it again?
So, where do you see ion exchange growing within 10 years? And what about the DuPont eyeing into the ion exchange business? And is ion exchange planning to grow its operations in diversified field rather than growing more on only chemical and engineering?
10 years is a long time frame, Chirag, and I would not like to delve into speculation on that longer time frame. Needless to say, we will be looking at multiples of where we are today. We hope to continue growing at a reasonably good pace as we undertake these measures on capacity expansion and both in terms of geographical presence and the products that we manufacture and engage in. I'm sure that we will see reasonably good growth in the foreseeable future. We do not really envisage that we will be going into unrelated areas. As of now,
Okay, sir.
Participants, please take
Thank you.
line from Mr. Ankur Patni got disconnected. Ladies and gentlemen, thank you for your patience. We have line from Mr. Patni reconnected to the call. We move on to the next participant. The next question is from the line of Vikas Goel, individual investor. Please go ahead.
Good morning, sir. Sir, my question is regarding you have recently launched a product called Hydrolite in consumer segment. It has all the ingredients to become our company at a next level. It has everything to. But I want to know about this product. How this product can help our company to go to a different level. And what about the competition? Is there any competition for this product in the Indian market?
This is a innovative product launched by our company. I'm sure in times to come, it will contribute significantly to the growth of the consumer segment. The competition for this product is very limited.
Sir, sorry to interrupt. Sir, there is a slight echo coming from the line.
Okay. There should not be any echo on my side. Is it better now?
Yes, sir.
Okay. So there isn't really any competition which has got an equivalent product. This has got a lot of innovative features which other similar products don't really have. And so you're right. This has a significant potential to contribute to growth of the consumer segment.
Sir, but I'm not seeing aggressive marketing or any push for this product since it has been launched 3-4 months back. But this product is so good that we should spend aggressively for marketing on this product, sir.
The product goes through various cycles of introduction in the market. The initial couple of months is always a soft launch, where we would try out the product in different markets, make sure that our service delivery is optimized and the supply lines are completely streamlined, and only thereafter you would see an increased level of market spend.
And sir, we are hearing about DuPont taking stake in our company. What about this?
Please don't look at what market rumors are, and I would request you to keep the questions to the facts and the numbers which are being published by the company.
Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Manish Poddar from Nippon India. Please go ahead.
Hi. So just 2 questions. First one was on the chemical side. So, could you probably quantify how much of, orders, let's say, didn't go through because of probably the logistics or the lockdown? And, would it be a fair understanding that this will come back in Q2 and thereby your margins will get restored?
Yes, Q2 should perform better. However, the logistic challenges haven't really been solved as yet. If you are tracking the global crisis on the front of the availability of containers and the consumer and the closure of a few major ports in some of the countries, you would know that the problem is still there. There is expectation that this situation would start easing over the next few months. We are keeping our fingers crossed and hoping that in coming times the logistic challenges would be significantly lesser.
And probably could you quantify how much amount of orders were lost because of this?
Orders were not exactly lost, but we've not been able to ship out what we could have shipped out during this period. And we, our customers have been quite understanding. Everybody is aware. But yes, there would always be situations where the requirement is immediate, and if our ability to supply is not commensurate with the demand expectations, there would be some attrition of this demand. I would not really be able to quantify exactly how much this has been.
Okay, and just two small ones. So let's say this chemical capex which you are doing, any timeline which you have, let's say for utilization of the plant?
Once the capacity, it would take roughly 2 to 3 years for the plant to get into 100% capacity utilization stage.
And if I understand it right, this is largely an extension of the existing products, or are we going to do more value-add products here?
No, it would be focusing largely on the current line of products. The addition to the existing product line is an ongoing exercise. This plant is not a part of new product introductions.
Okay, and one last one, if I can, is on these 2 contracts, let's say, which we had for the UP projects, have you been able to now, let's say, quantify the quantum of the order? Because I think the last quarter we had an estimation. So now, let's say, given that now it's we're up about 2 to 3 months, and the order is getting, probably will start booking revenues from Q3. So any estimation now you would have got on the order size?
We have started some of the project reports at the village and cluster levels approved. This process is still in the early stages. However, based on the current numbers that we are seeing, the estimate would go up from what we had earlier projected.
Okay, thank you.
Thank you. The next question is from the line of Pratik Kothari from Unique Portfolio Management Service. Please go ahead.
Thank you for the opportunity. So last quarter we had mentioned that the reason for upping our capex on the chemical side was because we were working on some technological innovation. So if you can just throw some light on what that is. Hello.
So can you hear us?
The question, please.
Can you hear us? Yeah.
Yeah. My question was, in the last phone call, we had mentioned that we were working on some technological innovation on the chemical side, and that was the reason why we have delayed our capex for a bit and also taken it up from 100 crores to 200 crores. So if you can just throw some light, what was this technical innovation that we were working on? And
I'm sorry, that is not something that I can discuss with you at this stage. But are you being able to hear me?
Yes, sir.
Yes, sir, we can hear
Okay. So that's not something which I'll be able to share with you, but it is a significant advantage that this bit of innovation will provide to us. And we really hope that once the plant is fully executed, we will be able to convert it in revenue and margins.
Fair enough, sir. Then earlier our plan was to double the resin capacity, right? So now what we are doing is we are also doubling the other chemical segment too.
No, this greenfield project is talking only about the resin capacity expansion. The chemical capacity expansion is happening, as I mentioned earlier, through other projects which are more distributed in nature. We are trying to create capacities in the international market so that we are able to address the demands originating from these respective zones.
Okay, and this is included in the 200 crores that we spoke about?
No, this is not included in the 200 crores.
Okay, and earlier we had said that we'll be doing 3 times asset turn on the earlier 100 crores. So that still remains for this 200 crores on the resin part?
Yeah, as I said, this expansion would initially look at doubling our capacity. So that's we will stand by that. It will not be 3 times. It will be slightly lesser than that.
Okay. So because the reason I asked this is while we were earlier doing 100 crores of capex to increase our resin capacity was supposed to go up 2 times. Now instead of 100, we are doing 200, but still we are keeping that the capacity will still go up only 2 times?
Yeah, because this plant would be in a position to give us more capacity expansions in the next phase.
Okay.
The second bit is that the additional investment which I spoke about on the technological front, that would give us advantage on other areas, not just in terms of capacity. It would have a very good payback.
Fair enough, sir. Then last question, what would be our capacity utilization on the membrane side?
Membrane capacity utilization is now very close to being 100%. it is upward of 90% at the moment.
Okay. And are we working to increase that?
Yes, we have already gone ahead with a plan to expand the capacity, double the capacity. This expansion should also be in place by the end of this year. It should be on stream.
Oh, great. Thanks. Fair enough, sir. Thank you and all the best.
Thank you very much. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. So I have two questions. One on the project side. Now, with the execution starting of the two large projects, what is the expected revenue booking that you would expect totally for the current year? And at what stage does the UP project start becoming profitable?
The UP project is actually a number of projects pulled together. As I had mentioned in one of the earlier calls, we are looking at a number of village and village clusters. And for each one of these, we would be having a separate DPR or project report, and we'll be executing those individual micro projects. Each one of these would be profitable in their own right. I do not therefore really expect the projects to be a bleed at any stage. In terms of invoicing on the two large projects, the UP project we expect to start invoicing in the third quarter. The other large one which we just won, I am not expecting any major invoicing to happen in this current financial year.
What is the expected revenue in project this year or execution that you will do this year?
Which one are you talking about?
Total projects business.
Total engineering business, you're saying?
Yes.
It should be a little bit higher than the last year in percentage terms. Vasant, can you share a ballpark number?
Should be, we should expect just about...
Sorry to interrupt you. You're sounding very distant from the phone.
We expect a 20% rough growth on the 2021 engineering turnover.
Okay. And my second question is on chemicals. Whatever industry checks we have done, chemicals is a largely single-digit growth industry because the usage is restricted to thermal and water. So, first of all, is this assessment correct? And second, when you're putting such a large capacity, the idea behind the capacity utilization linked to export or for it to get utilized?
In terms of utilization of chemicals, it is not just thermal and I don't know which is the other industry you mentioned.
Water.
Chemicals are utilized across all industries and all sectors that we operate in. Virtually every single entity that we would engage with would have some form or the other of chemical demand. There is also very large potential in the export market. And as you would have been witnessing, we have been performing reasonably well in the export market, and we continue to expand our presence in various markets and products. We are more than confident this capacity which we are putting up would get utilized in a short period of time. As I had just mentioned, I expect it not to be more than 2 or 3 years.
And what is the market growth rate for the industry?
Yes, it is on the low single-digit side. A fair guess would be in the range of However, our ability is affected by market growth because in terms of percentage of market share which we have on a global level, that's really, really very small. So opportunity for us is much, much larger than just looking at market growth.
What was the size of the largest player?
It's in hundreds of millions.
Sorry?
It's in multiple of $100 million.
Okay. Thank you very much, sir. Thank you.
Yes.
Thank you. The next question is from the line of Bhavya Doshi from Chris Portfolio Private Limited. Please go ahead.
Yeah. So I just had two questions for you. I wanted to understand what's the target size of our membrane and the resin market, and also how are we seeing things on the consumer segment?
Did I get your question correct? You are wanting to know what is the target market for resins and membranes?
Yeah. And also, what's your outlook on the consumer segment?
Consumer segment, I am very hopeful that we will be doing much better this year compared to the previous years. I am still hopeful we will be able to turn around by the end of the financial year. That's as far as the consumer segment is concerned. Resin and membrane market is a pretty wide market. As I was just talking to the previous caller, almost every and in all sectors, whether medium, large, or infrastructure, there is a requirement for resins and membranes. This is both in India and internationally. In the Indian market, we have a dominant share of the resin market. However, once you look internationally, that our market share is in the very low single digits. Therefore, the opportunity in the international market is really very large.
Okay, thank you.
Thank you. The next question is from the line of Sunil Kothari from Unique Portfolio Management Service. Please go ahead.
Thanks for the opportunity again. Sir, my question is on looking at the opportunity available related to water engineering segment in the domestic international market. Industrial investment is also slowly started happening, so we got just one order and again hopefully we'll be getting more. So will it create a better pricing power from our side and it will give you a little bit better margin? That's the right conclusion or understanding?
That's it's a very dynamic situation. Difficult to answer or generalize this. But yes, as the scale goes up, our ability to negotiate better goes up. We certainly hope that we will be able to capitalize on this leverage in the times to come.
Mm-hmm. Okay. And sir, with reasonably good order book size, will you be constrained for not taking any further bigger orders, or you have further scope to get and execute parallelly further this size of this type of and this size of orders during current and next year?
No, we are not really constrained. We would be able to pick up large orders, but it certainly gives us additional ability to be selective and choosy about what orders to pick up and at what terms. The project business or the engineering business is such that expansion of our ability or capacity is not really such a big constraint.
Mm-hmm.
The basic expertise of handling these projects very much is within the company, but we are in a position to expand our manpower, our engineering, design, and execution capabilities at relatively short notice.
Right. And my last question is, sir, can we complete this Sri Lankan order looking at the current situation, current year?
We have, over the course of the last quarter or 2 quarters, we have had further challenges because of the COVID scenario. Certainly, this current wave has hit not just our own country, but also Sri Lanka quite bad. The round in terms of effect on human life was larger than in the earlier stage. Therefore, there have been delays arising from movement of material, from movement of manpower and availability of manpower, and also on-site execution. So we have got a further extension from the Sri Lankan Water Board, and we at the moment expect that a good portion of the contract we would be able to execute by the third quarter, and there would be some tail of the contract which would still be left, hopefully to complete that bit also by the end of the financial year.
Okay, sir. Thanks a lot and wish you good luck.
Thank you.
Thank you very much. Participants, you may press star and 1 to ask a question. The next question is from the line of Ranjit Shivaram from ICICI Securities. Please go ahead.
Yeah. Hi, sir. We have seen the pace of execution and also the margins have tapered down in the current quarter. Yeah, we understand that some of this is due to this second wave of the pandemic. But then, what is our overall view for this year? Like, what's the kind of growth? Will it be in mid-teens or single digit, or what do you see the overall growth for this year for the projects? And last year had been a very good year in terms of margins. So will we be able to repeat such kind of a margin performance, or you believe that because of the kind of projects the margins will be a tad lower?
I think there was an earlier question on this, and Vasant had responded that we expect roughly 20% or thereabouts growth on the engineering revenue for the last year. This is on a full year basis. And on a full year basis, we should be able to sustain the margin which we reported last year.
Okay, that's great to hear. And in the consumer, why do we still want to run that business? Because it's making continuous losses. So what's the overall strategy in the consumer business? What's your thoughts on that?
I am quite hopeful that this year around we would be able to at least break even on the consumer segment. The potential of the segment is pretty large. Our approach to target products which are innovative and different from what some of the other competitors are dealing with. We are also dealing in slightly different market spaces, for example, rural India, and the kind of products and challenges which it requires is slightly different from what you would see in an urban landscape. So I am pretty hopeful that in times to come, the segment will justify itself, both in terms of top line and bottom line.
Okay, sir. Great. That's from my side. Thanks.
Thank you.
Thank you very much. The next question is from the line of Mr. Reddy, individual investor. Please go ahead.
Good evening, sir. Thanks for the opportunity. Sir, my question is regarding this engineering division pipeline. You mentioned that it is about 5,500 crores. This 5,500 crores is exclusive of the international orders. Am I correct, sir?
Yes.
So, what could be the pipeline for the international orders, sir?
So this excludes the very large opportunities that we are pursuing in the international market. The reason that we exclude it from this number is because it would very unreasonably skew and present a very large picture. I have stated on multiple occasions earlier that the time frame for these orders is very long. The gestation period could be in the range of 4 to 5 to 7 years. And therefore, in spite of the fact that these are opportunities which we are pursuing, we feel that it is better not to include it in the overall bid pipeline.
Yes, sir. It is gratifying to know that we are aiming at such orders. I mean, it will put our company in the next league. It is gratifying to know. Another question, sir, regarding this passing on of the raw material cost escalation. Is it, are we following the same principle in our engineering division as also, sir?
Yes, we try to do that in engineering business also. However, because of the nature of contracts and orders that we have in these two segments, there is a difference in the mechanism of how the price increases can be passed on. It is often a shorter cycle in case of chemicals and a longer cycle in case of engineering. And the nature and extent of negotiation, the give and take which happens with customers is also different. In some cases, in the engineering contracts, the price escalation is already built in, and in some others, it's a question of our ability to convince customers, which takes a little bit longer. But yes, we do make an attempt in almost all cases to try and explain to our customers the rationale, and we get.
Okay. Thank you, sir. Thank you, and all the best, sir.
Okay. Thank you so much.
Thank you. The next question is from the line of Dipen Shah, individual investor. Please go ahead.
Yeah, I think a few questions have been answered. Just had one question. Like you spoke about a 200 crore capex for the chemical business, and some more capex you were hinting out of India. If you can just quantify that amount of capex, what it could be, and if I understand correctly, this will be financed from internal accruals, or are you looking at any debt or equity options? Thank you so much.
Yes. Vasant, can you please take this question?
The capex of the 200 crores which was referred to will be taking debt on. It will be a mixture of debt and internal accruals. And
okay.
As regards the capex, other than the 200 crores, we expect it to be in the region of another 60 to 65 crores.
Mm-hmm.
That will be largely through the internal accruals.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you very much. As there are no further questions, I will now hand the conference over to Mr. N.M. Ranadiv for closing comments.
Thank you all for participating in this earnings con call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, we would be happy to be of assistance. We are very thankful to all our investors who stood by us and also had confidence in the company's growth plan and focus. And with this, I wish everyone great evening. Thank you.
Thank you very much. On behalf of Ion Exchange India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.